Hello everyone, Mehdi Photocure for mine. So today we are going to review the company with the most tailwinds in the market today. So what is this company? So this is Brookfield Corporation. So you may have heard of it, and we're going to see today why this company may need to be in your portfolio given all the tailwinds that it has in today's world. We are going to see today what are the tailwinds for Brookfield Corporation and how it's going to enable Brookfield to grow their earnings by 15% per year and become one of the most important companies in the world. So let's get started. So first of all, what is Brookfield Corporation? So Brookfield Corporation is today kind of a holding company with three main businesses. So the first business is Brookfield Asset Management, which manages money for their institutional clients who want to invest especially in Brookfield's specialty, which is real assets. The second business line is what they call today Wealth Solutions, which was previously the reinsurance businesses, which include Oaktree Capital, and which basically is kind of insurance company which provides insurance products and invests the money back to generate a spread. And the third business are actually directly operated businesses, and especially for Brookfield. So we have businesses about infrastructure, about renewable energy, and about real estate. So Brookfield is actually kind of widely diversified in terms of businesses and in terms of geographies. And today we are going to see why Brookfield is benefiting from a lot of different tailwinds in the world. And we are going to see today why Brookfield has so many tailwinds and why they may be able to grow earnings at 15% per year on a compounded basis. So how Brookfield is making money? So before we get into the tailwinds, I think this is a very important question and everybody needs to understand this very concept. So as we've seen, Brookfield has three main business lines. So how do they make money? So first, the asset management part. They make money into two ways. The first is about fees for their AUM, so asset under management. So meaning that they collect fees from their institutional investors when they manage the asset for them. So the second way that Brookfield Asset Management is making money is through carried interest. So carried interest is basically the cut of the profit that Brookfield is taking from the performance of the different funds and their different investments. And so as we've seen that Brookfield Asset Management makes money in two ways, so with fees and with carried interest. Carried interest itself can be unrealized or realized. Realized meaning that the fund has closed and that Brookfield has taken the profits already. And unrealized means that the performance is already here and we expect that in the future that this will be realized. And so that's it for Brookfield Asset Management. And so the second business line, which is the Wealth Solution, which was the reinsurance business. So here they make money a little bit like companies like Apollo, meaning that they are taking a spread from the money that they actually get from their insurance business and the money that they reinvest into their other business lines for this Wealth Solution business. So they are making money on the spread, meaning that let's say they pay 3% per year to their insurance liability, but they make 5% on their other investments. It means that they are creating a 2% spread on this capital. And that's how this business line is making money primarily. And the third one is operating businesses. And so basically here, I think it's pretty straightforward. So these businesses, they have different type of businesses and Brookfield operate them directly. So all the cash flow and all the dividends generated by these businesses actually flow into the corporation. And so that's how they make money, operating businesses. Okay, so the first tailwind that I want to discuss today with you guys is about AI and why Brookfield is linked to AI being an asset manager at the beginning. So Brookfield provides financial solutions for a lot of different clients. And what we have seen in the past few months and the past few years is that Brookfield has been one of the key players to provide financing solutions for the key AI players like Google, Microsoft, OpenAI to actually invest in their AI infrastructure. So Brookfield is enabling that because they are one of the most experienced players in the field of investment, being able to actually make those deals in terms of infrastructure. And so Brookfield is going to to be able to benefit from this tailwind of many companies investing significant amount of money in terms of AI infrastructure, which means on the first part about data centers. So Brookfield is enabling a lot of companies to build this data center from taking money from investors and being able to structure deals and structure this investment for big tech companies, for example. And you also have the other aspects of Brookfield, where it comes from their expertise in terms of renewable energy, where they are providing this type of deals, but also this type of, I would say, infrastructure deal where they bring operators and they bring a lot of expertise in terms of renewable energy and nuclear energy to the big tech companies to provide them like these investments for their data centers and provide them like electricity capacity for the data centers. So definitely this is one big tailwind for Brookfield, and we are going to see in the coming years that they are going to be able to grow and attract more and more capital under management for their different business lines. The second tailwind for Brookfield Corporation is renewable energy. And what we've seen in the recent years that we have a lot of needs in terms of energy, and people, they need green energy. And so renewable energy is actually becoming more and more obvious for a lot of different investors and a lot of different companies who have tremendous energy needs today, especially in terms of AI. And so Brookfield, being one of the leaders in terms of providing infrastructure around the world for renewable energy, is going to benefit tremendously from this huge demand on this very type of renewable energy infrastructure. And we have seen a lot of deals and in a wide range, I would say, of renewable energy. So we have seen hydro, we have seen nuclear, we have seen like solar. And so all the time, Brookfield is coming with their expertise into how to build this project and how to bring the financing to this project. And this is going to continue because, as we've heard from Sam Altman or from Satya Nadella, there is a huge demand for electricity, especially for AI. And we've seen in China that like they have been able to actually build a lot of capacity. And in the US especially, there is a huge lack of capacity for electricity. And so Brookfield is going to really benefit tremendously from this rise in terms of investing in the renewable energy infrastructure. Then Brookfield Corporation is going to benefit tremendously also from inflation. They're going to benefit from that in two ways. The first one is about asset inflation, meaning that the more assets are valued highly and the more assets Brookfield is managing, so which means that they're going to produce more fees on those assets. I think that this is pretty simple to understand. So if an asset is valued at 100 and Brookfield is actually taking a 2% management fee, so they're going to make $2. But if the asset is valued at $200 and that Brookfield is actually taking the same 2% fee, they're going to actually make $4. And so this shows you that with inflation in terms of assets, we are still going to see a growth in terms of earnings for Brookfield that they call distributable earnings. And so this is going to continue definitely because we are expecting inflation in terms of assets to continue with a lot of debt being created in the market. And the second way inflation is actually good for them is because they are operating a lot of different businesses, and especially on the real estate side, where with inflation, they can slowly but continuously raise the prices, so for inflation, but also for all the infrastructure business and for all the outputs that they have operating these businesses. So for example, in like ports or like pipelines, for example, where they can raise the prices year after year, very slowly, but still contributing year after year to their earnings. Another major tailwind for Brookfield Corporation and for all the players in the private field, like KKR or Apple, for example, is kind of the crisis of retirement for a lot of different people. So around the world, so in the past years, so we have seen that the government trying to actually shift the liability of pension and retirement from their side to the private side, meaning to let people manage their own retirement. And a lot of different pension funds actually needs to generate more and more money for these retirees. And basically, like we've seen that the bond market has not been very good lately, and it's not going to generate enough returns to be able to actually cover all the liabilities that these pension funds have. And so what's going to happen? So all the pension funds and also all these retirees, they will demand more returns for the investments. And that's where companies like Brookfield Corporation get into the game, meaning that they are going to provide a little bit more illiquid products for these retirees, but with higher returns, or at least higher nominal returns, I would say. And so we are going to see more and more pension funds and institutional investors allocate more money towards these private equity or real asset firms. And Brookfield is going to benefit tremendously from this rise of allocation into these assets because they're going to continue to manage more and more assets. So I think that today, BAM, so Brookfield Asset Management, is managing more than $1 trillion assets. And so this is continuing to rise, this is going to continue to grow. That's what Brookfield has told us. And this makes all the sense in the world because the amount of money that is generating today and that needs to be managed for all these retirees is still going to continue to increase. And on top of that, so all these companies, they're going beyond institutional and they're trying to bring products directly to individual investors, starting from what they call wealthy investors or high net worth investors. But definitely this is going to come back to the retail investors as well, because all these companies, they are trying to offer products to let investors, a retail investor, I would say, or individual investor, to be into this product and these funds that they are managing to try to increase their asset under management. So this is good in a way for individual investors that can benefit from these deals that are not accessible on the public market. But this is also very bad because a lot of these funds actually did not perform very well. And there is a risk for companies like Brookfield to actually just try to actually put the bags onto individual investors where they cannot sell or close the funds with institutional investors. So I would say that it's not always all black and white, but we have to be careful as well with this type of private markets. And speaking of private markets, so Brookfield with their wealth solution and Oaktree Capital is going to benefit as well from the rise of private credit. So one of the most prominent company in terms of private credit today is Apollo, but Brookfield is actually doing very similar things, meaning that they are providing private credit solutions, which are replacing, in a sense, what the banking industry has been providing to a lot of different companies. So they are providing financing solutions for mostly businesses to be able to actually finance different projects with very specific requests and very specific demands in terms of financing. And that's where Oaktree Capital is actually coming into this deal, providing a lot of financing, but also making a lot of money in terms of these private credits. And so Brookfield Corporation is also going to benefit tremendously from this trend of the credit coming from the banking industry going into the private equity industry, or here, private credit. Also, what we are seeing for Brookfield Corporation is that with the global growth, we are also seeing a lot of needs in terms of global infrastructure in the real world. And with this lack of infrastructure, Brookfield is actually coming in, and there are a lot of opportunities around the world for Brookfield to actually get in and help a lot of different countries build their own infrastructure. It means trains, it means ports, it means pipelines, it can mean roads as well. And a lot of countries are actually growing their GDP, and the middle class is actually also rising. So countries like India are going to invest tremendously to actually grow their infrastructure, and that's where Brookfield is also going to benefit tremendously from these trends of countries which are not fully developed yet to actually bring a lot of infrastructure into their country. So stay tuned, and we are going to see that this is another tailwind for Brookfield Corporation. So we've seen that Brookfield Corporation is going to benefit from a lot of tailwinds going forward. But why today this stock and this company is very compelling for an investor, and especially a global investor? So first of all, Brookfield is going to grow earnings very significantly in the coming years. So they have in mind, and they are guiding for 15% plus in terms of growth in their distributable earnings. And if there is no changes into these tailwinds, we are going definitely to see that coming into fruition. So you may ask, like, why can they grow these earnings at 15% plus? So we have seen all these tailwinds, but the reality is that Brookfield is also very leveraged, and so this is also what you should keep in mind. So like of a lot of private equity, these are kind of leverage play in the economy. So when the economy goes well, these companies are going to do well. And so today, Brookfield has a lot of tailwinds, and we can be very positive and very optimistic about this company going forward. And the company is also very resilient, with a lot of capital on hand and being able to actually navigate a lot of difficulties in the market. So on a long-term basis, this is very compelling, especially that today at $68, so Brookfield is kind of undervalued. So the valuation that Brookfield is actually giving us from their different business line, given that a lot of their business are public, which means that these valuations are given by investors. So the valuation for the Brookfield shares is around $94 today in their latest earnings. And so this shows you that the fair value that Brookfield is seeing in their own stock is widely different from what we are seeing in the market. And definitely this shows that there is a huge expansion possible in terms of share price in the coming years. And this shows you that definitely this is a very good opportunity as an investor, especially if you believe in those tailwinds going forward. So we've seen that Brookfield Corporation is a very compelling stock in the market today, with the most tailwind in the world. So with data centers, financing renewable energy, benefiting from asset inflations, and the retirement with their wealth solutions, as well benefiting from a lot of private credit needs and global growth with global infrastructures. So Brookfield is going to benefit from a lot of growth going forward, and this is a stock that you should definitely check out. And so if you're also interested into other analysis like this one, so please check my other videos on this channel, please subscribe, and I'll see you in another one. Bye!